All right, let's dive into a pretty bold investment thesis that's been making the rounds. It claims a company called BMNR is on the verge of a super cycle, with a potential price target of $100. So what's really behind this claim? Let's unpack the argument. Okay, so the whole foundation of this theory, it really starts with one absolutely stunning number. According to the source material, BMNR holds 3% of the entire global supply of Ethereum. I mean, that's not just a big stake, right? That is a strategic position in one of the world's most important digital assets.
So what does that 3% actually mean in cold, hard cash? Well, it translates to 3.6 million ETH sitting in the company's treasury. At recent prices, that's a verifiable, on-the-books asset base worth a massive $11.2 billion.
And this, right here, is where we get to the core puzzle. When the stock was trading around $25 a share, its market value was just a tiny fraction of its actual assets. The sources we're looking at call this an impossible disconnect, basically arguing the market has to be fundamentally wrong here. Yeah, but that's the million-dollar question, isn't it? I mean, if this company is sitting on a verifiable treasure chest, why on earth did its stock price just completely fall off a cliff? Clearly, the market had a very different take just a few months back.
Well, the thesis actually has an answer for that. It's a theory they call the market maker hole, and it's their explanation for that huge sell-off.
And here's the key distinction they make. The argument is that the sell-off wasn't fundamental. It wasn't people suddenly thinking BMNR's assets were worthless. No, instead, they claim it was technical. We're talking forced liquidations, margin calls from other crypto blowups. All of this created what they call artificial selling pressure.
Okay, so if we accept that the crash was just a technical glitch, the thesis then zooms way out to the big picture, this idea of an Ethereum supercycle. So, what's a supercycle? Basically, it's used to describe a period of explosive growth that just completely dwarfs previous market cycles. The parallel they draw here is with Bitcoin's mind-blowing run back in 2017. The argument is that Ethereum is now hitting that same kind of phase of widespread institutional acceptance.
You know, any good story needs a specific catalyst, a trigger. And for BMNR, this thesis points to a huge network upgrade that supposedly flips the script on the whole business, turning it from just an asset holder into a real revenue generator.
So, this catalyst is an upgrade called Fusaka, and the way it works is actually pretty simple. Think of it like a massive efficiency patch for the entire Ethereum network. It optimizes how transactions get settled, and that directly boosts the rewards, the APY, that stakers like BMNR earn. Bottom line, it's a network change that's basically like giving BMNR an immediate pay raise. And this is the really crucial point. This new, growing revenue completely changes the story. The company goes from being, just a vault holding digital assets to an active business that's generating some serious growing cash flow. And that changes the entire game for how big institutions value this stock.
Okay, so that's the theory. Sounds pretty good on paper, but is anyone actually buying it, literally? This is where the thesis shifts gears, away from fundamentals and towards following the breadcrumbs left by what they call the smart money.
And the very first piece of evidence they point to, it's the chart itself. You see the stock's recovery formed this classic V shape. For chart watchers, that's often seen as the most aggressive, most bullish reversal pattern you can get. It basically signals that buyers came rushing back in just as fast and just as hard as the panic sellers ran for the exits.
So who were these aggressive buyers? Well, the sources point to an absolutely staggering jump in institutional ownership. We're talking from just 6% to 31% in only 2 weeks. I mean, that kind of accumulation is almost unheard of and suggests a really profound strategic shift is happening. And listen, we are not talking about small-time players here. The sources are name-dropping some of the biggest heavy hitters out there. ARK Invest is cited as actively buying shares, and maybe even more important, BlackRock is reportedly watching very closely. This isn't your average retail hype. This is serious, big league capital being put to work. But here's the thing. This buying doesn't seem random. It looks like there's a very specific goal here, something the source material calls the alchemy of 5%. See, hitting a 5% ownership stake is this magic number, this critical threshold. It can trigger inclusion in major market indices, which then forces all those passive investment funds to buy in, whether they want to or not. Okay, so if the big institutions are buying with a specific plan, what does that plan actually look like on the chart? Well, the thesis lays out a really specific technical roadmap with key price levels that have to be taken out one by one.
So there are 3 key levels to keep an eye on. First up was the floor, right around 25 bucks, which buyers defended like their lives depended on it. Next is what they call the battleground, sitting right around $32. And if they can clear that, the next major target on the map is $47, a previous high. Now, that $32 battleground level, it is absolutely critical, and here's why. It lines up almost perfectly with the 200-day simple moving average. For all those institutional trading algorithms, the 200-day is the line in the sand. A daily close above it isn't just a friendly suggestion. For many of these huge trend-following funds, it's a mandatory automated buy signal. The machines just start buying. All right, let's take a step back and put all the pieces of this puzzle together. Let's recap the core argument for this BMNR supercycle thesis.
The whole case really boils down to 4 interconnected pillars. First, you've got this massive, verifiable pile of assets that's trading for pennies on the dollar. Second, you have a solid explanation for that scary price crash that says, hey, it was technical, not fundamental. Third, there's a very specific catalyst, the Fusaka Upgrade, that turns those assets into a cash flow machine. And fourth, there's a clear technical roadmap that seems to be backed by a flood of institutional money.
And that brings us right to the final bottom line question. According to this thesis, all the dominoes are lined up perfectly. So is this a perfect storm for some serious price discovery where the market finally wakes up and smells the coffee? Or is this just a really good story that's led to a massive case of institutional groupthink? That right there is the billion-dollar question.